Hello, and welcome to our market alert video for today, which is June 23rd, 2023. And we have a lot to talk about today, so I'm going to dive into it. But before I do that, I am Ken Moraif, and I am founder and CEO of Retirement Planners of America. And we're a firm that specializes in retirement planning, as the name implies. So this video is designed for those of you who are over 50, who are retired or retiring soon, primarily. Not everybody, I hope, will enjoy it, but primarily that's who it's made for. So let's talk about the driver over the last decade, and certainly now, of the markets, and that is the Federal Reserve and what they're facing. Now, as you guys know, if you've been watching our videos every week over the last several months, we've said that inflation was going to come down pretty quickly. The Federal Reserve raising interest rates as they have been doing, as they have done, would cause inflation to drop significantly. And in fact, we said that when the numbers came in this month, that inflation would be down around 4%, 4.1% is what we said. It came in at 4.0. So we were very accurate, I think, with margin of error there. Now we think that in July, when they announced the inflation numbers, that we'll see inflation drop to under 3.5%. So does that mean the Federal Reserve has won? Does that mean that now, they can rest and all is well? Well, not so fast. As Harrison Ford said in Star Wars years ago to Luke Skywalker, don't get cocky, kid. And so, yes, in the second half of this year, we think the job of getting inflation down to the Fed's target of 2% is going to be way, way more difficult. In fact, we're even going to say that inflation will get down, as I said, under 3.5%. But heading into the second half of the year, we think the headline number, the CPI number, is going to come in at higher and probably trend back up towards 4%. So that's going to be interesting for how the market is going to absorb that. Certainly the Fed, we think, is going to have to raise interest rates some more if they want to get down to the 2%, if they're really serious about that. And I think, we think that they are. So that's going to be cause some volatility. It's going to cause the markets, we think, to be very nervous. So we should see a pretty rocky second half of this year. Now, having said all of that, we still believe that by the end of this year, the market, the S&P, the Dow, will be higher than it is today. So we do think the trend is going to be in the right direction. We also are counseling our clients to not be in bonds yet. We've been out of bonds since last April. And April of 2022. And the reason why is because as interest rates go up, bond values tend to fall. And so because of that, we don't think the Fed is done raising interest rates, and therefore we're not ready to say it's time to go back into bonds. So we're also not in our more aggressive stocks as of this point. We're in our conservative stocks, if you will. Again, because of the volatility, and we want to see the shakeout, get past this shakeout after the Fed's decision last week. So overall, our forecast for the second half of this year is that it's going to be, inflation is going to be on the mind of everyone, as it has been. The Fed is going to raise interest rates some more. Inflation may even start to go back up again, which the market may not take very well, at least in the short run. Overall, though, we think that by the end of this year, we might be higher than where we are today. So what does that mean for you? Well, the most important takeaway, we think, from all of this is that the market can change in the blink of an eye. There's an old expression that says the market can remain irrational way longer than you can remain solvent. And so we believe that protecting principal is job number one. Yes, growth is important, but protecting principal is even more important, particularly if you're over 50, if you're within 5 years of retirement, or you're in that first 5 years of your retirement. So therefore, we think you should have a strategy to protect against that. We do. We have our Invest and Protect strategy. It told us to sell in November of 2007, before the great stock market crash of 2008. It told us to sell in April of last year. And you know what happened in the second half of last year with the market? Not pretty. So we want to help our clients to avoid that as much as we can. We'd like to help you as well. Our website, you can click on the link below and visit with one of our retirement planners. You can go to our website directly, rpoa.com. We'll visit with you, no charge or obligation. If we can help you, great. And if not, that's fine too. Either way, we will part friends. So take advantage of the opportunity to visit with one of our retirement planners and avail yourself of all the resources we have for you. Okay, so thanks for watching this video. Share it with as many of your friends and associates as you possibly can. We want to help as many people as we can to achieve what we call your second childhood without parental supervision. That's your retirement. So again, thanks for watching, and we'll talk soon.